All right. Hello and welcome everyone to another awesome collaborative edition of Trading Bitcoin with your host, Vays, being joined by the one and only Willy Wu, coming to us from evening time in Hong Kong. How are you, Willy?
Hey, Terry. Yeah, good. Nice part of the evening. Just feel very productive. I got my letter out and gonna unwind with you this evening with a
Yeah,
glass of wine.
a little too early for me to start drinking on this Sunday,
You
based on
look
where
like you're
I
in
am
Hong
in
Kong.
this part of the world. But hopefully, you and I will get together in Dubai in a couple of months. So, though we're not going to get into the whole COVID thing, or I want to be in an awesome mood this morning. I read your newsletter a few minutes before it became published for everyone. And Willy, of course, doesn't need much of an introduction. Let's just head over straight to his um, Twitter channel right here. Amazing follower count. You, of course, have a very respected reputation in the space as an on-chain analytics analyst for Bitcoin. We're going to dive into a few of his recent tweets. As you can see, this is Willy's newsletter. These are all the previous times it was published. This is the one that was published this morning. Those interested in it, there's a link in the video description, also right here. That's Willy Wu's Substack for that newsletter. Am I like divulging too much already? Let me stop that. And I thought it would give me the paywall as well. Maybe it does right after that chart. This is Willy Wu's website. I don't think you need much of an introduction, man. Let's just jump straight into it. I'm not even going to do my analysis. I'll do my analysis later. Willy, you must be happy.
Yeah, probably lack of it's kind of like I don't know, it's like the last 2 months has just been non-stop troll fest.
Oh yeah, I'm sure you would get totally trolled on this whole
And
thing.
yeah, and it's like everyone's like impulsive and not really patient for things to play out because a lot of fundamentals take a bit of time. But anyway, I just retreated into my research cave, and I think I'm gonna just post this in future because like the state of Twitter is just a complete shit show of trolling, and mainly from I think new noobs. But it just becomes unrewarding experience. So I'll probably just tweet less analysis and maybe more macro-ish research in the future.
Yeah, you could also look, we love your charts. You could also, tweet out the charts with a little bit less explanations and let the smart people that can read those charts make their own conclusions.
Yeah, maybe. Like
Just
what you actually get, like actually what happens on crypto Twitter is that a lot of people on there are actually new, right? You can see the massive growth of followerships on the major accounts, and that shows you how many new people are coming into the space. And so they're there to learn. So they really need the breakdown of simplifying. Like you can post a chart, smart people might get it, but majority won't. And they really need it spelled out so they can figure it out. But once you do that, the trolley people get in, and it's mainly the traders who are either in a position that's counter what the analysis is. So rather than take it for what it is and use it as a way to adjust their risk management, they decide that they want to like shout down the opinion that is counter to their trade. So yeah, anyway, I'm now kind of really glad the newsletter is around, because that's going to be the focus of my like analysis in future, because it's just much more pleasurable.
Yeah, you go through a phase, right? I know the newsletter was taking up a lot of your time, And once you go past that hump, it becomes, it becomes a little bit, it's like a new job. When you start a new job, you're learning so much new stuff. You're learning how to handle everything. And then over time, you're like, okay, I can do all this. Time to take on more responsibility.
Yeah, exactly.
Yeah,
it's starting
it's
to
just a
feel a little bit
natural
better.
transition. All right.
Yeah, and I think, yeah.
I was gonna say,
And
let
also,
me
yeah, you
go,
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 you
go,
go.
go, go. No, you go, 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 go.
No, let's just saying the data, quality of data is getting so much better now that, when I started the letter, the data coming through was not at the same quality that, like, there's been massive strides by the industry and Glassnode in particular. And so the kind of stuff I look at now, it's just, 10x what it was a year ago. And so it's a lot easier to write the letter because of the quality of the data. It's much more definitive. And certainly 2 years ago, it was starting to look archaic, the kind of analysis we were doing. Now it's like laser guided projectiles. It's very it's made leaps and bounds. So, and the next stuff coming up is going to be even better.
Yep. All right. Since I do have my screen share up, I'm going to take no more than 60 seconds just to glance at my daily chart of Bitcoin. I'm very happy that we did break the prior swing high on both the closing and the intra candle basis. The MRI top, which I expected to call this short-term top very, very nicely. The following day was a very crazy day. Maybe Willy can give us a little more insight as to what happened on July 30th, because we were dropping and then had a huge rise at the end of the day. So I'll ask him about that. I still think there'll be a little bit of a pullback. At first, I thought the pullback would go to as low as 35 on its worst case scenario before, getting up to new all-time highs. Now that we've made it all the way to 42 and change, I think that the pullback should go no lower than 37 and a half before coming back to the 40s and eventually breaking out of it sometime in August or early September. That's basically my overall view on Bitcoin. Not much more to say there. And since we're at the beginning of the show, Willy Woo does plan to join us in Dubai for the financial summit in early November, and doing my best to get him there a little bit earlier with this awesome picture for understanding Bitcoin at the end of October. All right, on this note, I am stopping my screen share. Maybe glance at the mempool. We're gonna ask him about this as well. The mempool continues to be empty like it has been for months now. Is that good? Is that bad? The difficulty adjustment is going to go higher again. Chinese miners are getting plugged in other parts of the world. All right, my screen share is stopped. We're going to go off to Willy. You want to talk about the mining first before we get into the charts while people continue to stroll in? We're at 700 live viewers.
Mining. Yeah, okay, let's have a look at mining. Let me grab
more from a macro perspective, right? Like, how do you see this whole, that's another question I want to ask you. We've debated this on my YouTube channel. The mining ban in China, is it good for Bitcoin or bad for Bitcoin? Most people take the side that it's good for Bitcoin because the biggest FUD that the Chinese, the mining was centralized in China is no more FUD. To me, this is bad. Now mining is being centralized in the West, mostly the US, which already has a concentration on coding, which already has a concentration on nodes, and custodian Bitcoins, which is also not good for the ecosystem. Too much Bitcoin held in custodianships. All of that is now dominated by the United States. I don't like that. I actually liked that most mining was in China. It created global diversification. Your thoughts on this?
I'm agreeing with the masses. I mean, Tone, you're the classic
contrarian.
Contrarian. Yeah. It's, well, I think 60% of the hash rate being inside a totalitarian regime, which is subject to the whims of one person, is about as centralized as you can get. So I think that moving outside of the Chinese jurisdiction is massively bullish for Bitcoin because at the end of the day, the metrics around Bitcoin's decentralization, which we can get into a little bit later, that's about the only thing that matters to me for Bitcoin to be a success because effectively, Bitcoin, its biggest value proposition is decentralization. If Bitcoin is a new monetary standard, if it's centralized, it's dead. Like gold, the gold standard was centralized and that died. So really, this is the biggest game in town.
Yeah, no,
Actually,
I
is
agree with you. I
decentralization.
agree with you. But this is the point of debate, right? I feel that Bitcoin was more decentralized when mining was in China, and now I feel that Bitcoin is a little bit less decentralized. That is the debating point.
There's a lot of stranded power in China because of these empty cities they built. But now it's going out to stranded energy spots all around the world. And that doesn't mean it's centralized in the US. It just means that it's going to seek the stranded power in all of the spots where it's available in the world. And that's not in one central location. And America in particular, not well, even Europe, yeah, those two areas, if you want to call that the West, they are very decentralized areas. Like the United States is very decentralized. Every single state has its own policy, and they compete amongst themselves, as does the European Union within their member countries. So yeah, totally different game from China, right? So I'm kind of bullish. I'm very bullish, long-term bullish, short-term bearish, right? Because of the mining capitulation, which we did see, and I'll probably just share a chat. I'll share the chats now.
Yep, go for it.
Sharing. So I've got the hash ribbons here, which is the hash rate on the network, and they're just different moving averages, so you can see easily visually the expansion of.
Whoa, that's a huge drop. That's like what happened in the early 2019.
No, it's way worse. It's the biggest hash rate drop in the history of Bitcoin, right? This is validated as the biggest drop. This was a tiny drop.
No, I meant like the mining ribbon. I like the
Wow, so this is like the biggest hash rate and difficulty drop in the history of Bitcoin because 60% of the hash rate suddenly got banned, right? So, but we are in recovery, and so when the hash rate drops, miners are going out of business. They're shutting down their miners, and they sell their coins to relocate or to liquidate because they're out of business. So that's what we saw here. Once it recovers, it means the rest of the mining network ain't going to sell their coins because all the weak miners are sold and they're going to hold on. So that's what's happened now, and we're in recovery. And if you look at that, that was your bottom signature from the ribbon there, which is not too bad in terms of vertical movement and price. And this is the ribbon for the bottom of the bear market, right on there. So pretty good indicator. So miners are in recovery. We're in a bullish phase. Typically when miners capitulate and we expand back up and recover, we've got multiple months of bullish price action, like 3 or more months. Historically speaking, anything can happen, of course, but historically speaking, we're set up to go up now. Like this movement down here is like Elon Musk flooding energy, bullshitting his way into, I don't know, his relevance for green credits, and China banning. Oh, the rumors of China banning. Actually, that started here, and then the banning of miners in China here, and then there was an onslaught of bearish FUD from members of central bank cartels and whatnot. So we saw a massive attack on Bitcoin over this last 2.5 months, and it weathered that by a halving of price, and it's obviously we can see that now it's bounced back stronger than ever. So yeah, it's a very good test for Bitcoin. You know, I was saying here, fundamentally, it looks very strong. People were saying it would go down to 20s, but it didn't look like that. It looked very strong here. Didn't look like we'd complete this. What was forming was head and shoulders going down to 23-ish was the expectation. But instead, what happened was we started grinding down. And what was happening was traders got ridiculously bearish on the price action. So they started to sell down their positions. And so you know, when this dump happened, it was fundamentally strong selling from real investors, long-term investors, dumping like there's no tomorrow. And obviously, when they sell, someone's got to buy, and that wound up on the exchanges. So the speculative inventory on spot exchanges was at a very local high, and traders had control of those coins, and they started to sell and short the market down. But if you were to look at this chart here, which is the supply shock metric, which, you know, it's a simple metric of how many coins in the system that you cannot buy versus how many you can. It's the ratio between the two. So the more that you can't buy, this goes up. And so you can measure it two ways.
It goes up when you can't buy them.
Yeah, like if say there's like 10 times more coins than that you can't buy versus the 10% you can buy. And then that grows to 20 to 1. Or this ratio is the ratio.
This is rise right there.
This is the ratio is 6.5 to 1 there, right? The 6.5 to 1, and the ratio here is 3.4 to 1. And these are two different metrics. This is like what I'm using here. What you can't buy is what's in cold storage, and what you can buy is what's on the exchanges. This is what you can't buy is Rick Astley's coins, and what you can buy are the coins held by speculative investors. So this is Glassnode's liquid supply. They do forensics onto the entire blockchain and all the wallet spaces, and then they look back on. This is essentially Google surveillance on the blockchain. It's going, oh, you're a long-term holder, you're a speculative guy. And then they go, right, we're going to classify your coins as Rick Astley. You're not going to sell. And we're going to classify your coins as weak hands. You're speculative. You buy, you sell. And so this is the ratio between the two. And it's the qualitative view of supply shock, where this is a quantitative, which is sheer number of coins that you can see on exchanges versus not. And they both very much track price, and they've been tracking each other. So as traders have been selling down in their bearish pawn charts they were sharing once between each other. Long-term investors, particularly the qualitative views of Rick Astley's, the strong hands were scooping up coins like no tomorrow, knowing that this was a dip, unaware, like traders totally unaware of it, expecting lower 20s, and eventually like the supply shock took hold, and the reality of less and less coins on the sell side of the market took hold, and this thing started pumping. And at this point here, we had a full-on squeeze. You know, I remember that candle clearly because I'd just woken up, and this thing was shifting like, what was it, a $3,000, $4,000, $5,000 move in sheer minutes. That was the total squeeze. All of this was like buying, and then there was a final squeeze up here, and now we're up against
right. So that final squeeze, that was the July 30th, right, when we started falling from 40,000 down to 38, and then immediately reversed for about 4G. Right?
Yeah, totally. Let me grab your. Yeah, so I guess I can pull up one of my trading view chart on it.
Like that one did catch me by surprise a little bit. I really expected a 1 to 4 candle pullback off of 40, but then it went to 42 the next day. And now we're back in that. Are we in a pullback? Are we consolidating? Are we about to do one more short squeeze? So right now, I still think right now we're in a little bit of a no touching zone. But if we go back above 42, I think it's on all the way to 50.
This chart, by the way, gives off a clue. This is like, you can see how price and supply shock are very correlated right now in this phase of the market, because yeah, this phase of the market it's actually quite spot investor dominated. Like we're not in a phase where price is highly FOMO and it's all dictated by derivative exchanges with traders like getting high and moving price up and down. We're in a phase where the fundamental price action is dominated by the buying habits of like long-term investors putting a floor under the price. And like if you look at the level of supply shock we have, like all the coins that were dumped onto the market and held by speculative hands have been mopped up, and they've been mopped up, and we're at the same levels as we were in the $55,000 to $65,000 highs. And so if I go to this point here at the same level of supply shock and move up to here, we're in the $55,000 zone of the last visited level of supply shock. If you look at exchange supply shock, we're at all-time highs. But this number is a little bit sketchy because it involves labeling all the addresses and on the exchanges, which is subject to error. And so there's a lot of weirdness right now because there's some debate as to whether some exchange transactions were internal versus external. So this is less reliable, and I haven't like posted any charts using exchanges lately because this data needs to consolidate. And I spoke to Glassnode, and they're still looking and monitoring it and figuring out what's internal and what's external. But this one is like much more reliable, and so the market needs to move upwards if it's going to find balance to historic levels of supply shock, because we're not there yet. Like 42,000 or below is too cheap given the scarcity of coins on the market. So like I'll probably pause here and see if there's any questions on the chat room. Otherwise I can move on.
No, we can jump over to another chart, but I just have to remember someone put a good question in. An Ethereum hard fork's coming for them to become more centralized, and there's lots of speculation there. So maybe at the end of the show, you can talk a little bit about what you are potentially expecting from the Ethereum speculation, and whether that's a sell the news event, whether it goes, whether they've chosen wisely or poorly, and either way, this could be more bullish for Bitcoin in a couple of weeks.
Yeah, okay, but I'm not an expert in Ethereum. I don't look at it too much.
No one is.
There's only so much you can do. Only so much you can do. Oh, I think there's a lot of people looking at it, growing in interest over time. What's happening here? Oh yeah, my computer took time to crunch. Let's go. I think I'll do this one first. I published this publicly on my Twitter, and this is a heat map of the buying habits of shrimps. So essentially the guys that hold less than 1 Bitcoin, and we can tell that it's not addresses. It
looks like they've been stacking.
Yeah, they always stack. Shrimps stack sats and they don't let go, right? Then they're little geniuses, right? They buy and they buy and buy until bear market hits, and then they wait to the bottom, and then they buy and buy and buy. And you can see they're buying the COVID dip. They bought this dip. They're buying hard under the resistance before it squeezes up.
They never stopped buying. This is so different than everything else. If you can
Of course, like
They never
everyone,
stopped buying this dip. It's awesome.
shrimps are normies, man. Shrimps are normies. Every normie I know is like got day jobs. They're not religious cult members of the Maxi clan. They go, okay, I'll buy some Bitcoin, get some exposure, and get on with their day jobs, and they look back in a year or 2 or 5, right?
Any chance you have this data for 2013? Because I still think we're in a 2013 style bull market.
Yeah, sure. Except 2013, remember, less than one Bitcoin was squat all.
A lot of money.
Like $10, right? It was $10, right? So if we're going to look at the equivalent of shrimps in 2013, we've got to turn off shrimps.
I'm sorry, I didn't mean a lot of money. I mean less than one Bitcoin back then was little money.
Turn on crabs. Let's turn on crabs. Or yeah, that you can kind of see there, but like maybe we need to go to octopus and fishies.
Yeah, you're gonna have to go all the way into dolphins probably.
Yeah, they're growing up, and then
there you go.
There was a right.
Dude, this is a really cool chart. Is this on? This is on Woonomic charts. Is this public?
No, it's highly expensive data that you.
I was about to say this is really good.
You're going to have to pay $800 a month to Glassnode to get access to this. There's a massive amount of data science underneath this to cluster this into individual entities and surveil their history, right? So like actually most of the data you see elsewhere is just completely obsoleted now. Like those metrics are so past due date. And actually you'll see that from the bad analysis on crypto Twitter using old metrics like address spaces, because it does not show the changing habits of users, you know, whereas this stuff remains relevant.
Can you turn on dolphin shark, dolphin_shark?
Dolphin shark.
Yeah.
There you go. See, dolphin and sharks, I want to debunk this whole idea that whales and the big guys are smart, because they're absolutely not. Like, these are the dolphin sharks buying the top, and these are them selling the bottom, right? And let's go to whales.
I really like that dolphin shark. Yeah. Go on. Yeah, go to whales.
See, they're just schizophrenic. Generally, they sell because they're rich as, they divest. And then they try to time the market. Sometimes they're right. They bought
they bought at the worst time back in 2014. Jeez.
So yeah, like the whole profile of whales is there's a conspiracy that whales control the market, and that's completely wrong. And I'll get to that later. And this is like this is very recent research that I've been doing the last month, and it's like, oh my god, everyone's view on the market is just conspiracist, and it's unsupported by data. So right now we've got an interesting setup here. First off, let's just look at this from a macro perspective. This is what it looks like for a bull market. This is what our bull market looks like. It's getting stronger. The buying's getting stronger, and there's no bear market in sight. It's just only getting bigger. And the little geniuses like buying that dip, buying all of this dip while traders were shorting the market and selling their coins. And let's superimpose the other side, whales. Right? What's interesting is nobody is selling right now. There's no sell pressure coming from these on-chain wallets. So the only people that can be selling are traders on exchanges who have their coins there, which this doesn't capture. All the coins are moving off the exchanges, which we can see on the exchange flows. And this is the entire...
Wait, don't come off that chart yet.
Yeah, this is the same view, but like now it's the entire spectrum. This is everybody from shrimps to whales, right?
What I find fascinating is, well, not on the full spectrum, right? But when you go to the one you had previously, so many people are selling at consolidation near all-time high. And that is one of the biggest mistakes. Like if you just turn on shrimp, you'll see it too. you'll see the shrimp selling at the end of like 2020, or like in October of 2020. And that is probably one of the biggest mistakes that novice traders make, especially if they're bought into something, they're in a slight losing position for a little while, and then they're happy to get out break even, which is the worst time to get out. Like
I'll say novice whales, not novice shrimp.
Yeah,
Shrimps are geniuses. Whales are the novices in
no,
trading.
but even shrimp, like when you look at only the shrimp, like they were selling more than they should have in October of 2020.
October of 2020.
Right there, like that red dot. No, the next one, the 2020.
Oh, yeah, one red dot.
No, the 2020. You're in 2019. The other red dot, the biggest red dot. No, to the right. Yeah, that one. The biggest red dot on the whole screen was at the worst possible time, at consolidation, about to break out.
Oh yeah, that was one of the few times that.
Yeah, it happens all the time. Like, this is what I tell people. Like of course you have to be bullish at a break of the new all-time high. That's the most obvious trade there is.
That was an all-time high, by the way. That was.
No, I know, but it felt like an all-time high because of the 2-year thing, and we're like, it was, to me, that was as good as an all-time high.
Hey, anyway, going back to the this point here. See this zone in here? There's only green bubbles for 9 days straight. Only green bubbles. Selling has been outlawed by every single holder from below 1 Bitcoin to above 1,000. Every single holder has outlawed selling. They're only buying, and buying in large quantities. You can go back on the history of Bitcoin. Never have we seen a period this long of significant buying by all cohorts. Usually there's one of those guys selling on one of those days, not seeing it right. It's a very crazy, special time right now. Everyone is buying. This is like an OMG signal. So yeah, that's that. We can switch to stable coins. We're starting to see stable coins starting to flow back into Bitcoin. This is the oscillator moving. So there's a mass amount of stable coins on the sideline. So when this thing starts moving, they're going to flow back in a rush, and that's going to power the next number go up move for Bitcoin. Obviously I've outlawed from the data so far a prolonged down movement. I think we need more bears though. I really do think we need more bears to power the up move. Up moves are more exaggerated.
The funding rate has been depressed for months, and while there hasn't been any major spikes down, the accumulation has been massive.
Yeah, it's only starting to wake up to demand and supply as seen by the fundamentals. So we're now starting to see, I don't want spot flows, I want derivatives. Glassnode data, live chat. Here's the perp funding rate here being pulled up. Okay, so there you go. So funding rates have just tripped over bullish, net bullish by traders. Months and months of bearishness. Let's zoom out a bit to the 6 months. That should be more exact. Oh, I can't see that. Oh yeah, well, there's bullish. It's been kind of bearish there. It's a terrible. Glassnode could improve these visuals. So yeah, they're siding on bullish, which will provide headwinds. So we need more bearishness if number is going to go up. Without resistance. So everyone on the show, we should all short Bitcoin so it can go up. Okay. Pro tip. So
yeah, well,
I'm gonna just jump.
Speak a little bit louder. That would be awesome. Yeah.
I'm just going to jump to this, which is a bit of a longitudinal study. It's long-term.
I really like this chart.
This is a long-term study of Bitcoin distribution. It's just a middle finger to Bloomberg and all of the bankers saying Bitcoin is controlled by whales and the rich like 2%, which is actually again bad and flawed analysis using very early unprocessed data. What I've done here is take the Glassnode data on the supply held by different entities. Of course, that's an immense amount of clustering and forensics to figure out the number of people and the amount of holdings they have across all their wallet spaces. And then what I've done is taken all of the data that is out there to ascertain the entire ecosystem. So I'll turn off some traces and maybe I'll introduce them a little bit later. But
yeah, you should just leave shrimp versus whale for now and then introduce the rest.
Okay, so what we're used to, right, is the exchanges, right? This is the inventory that's moving up on exchanges. There's been a very long-term trend for coins to be stored on exchanges as more and more retail start to come in and they trust exchanges to hold their coins, forgetting the lessons of Mt. Gox. We've got a little bit of supply shock as it's been scooped up by institutionals here. I did some research onto ETFs, which is the rising force, mainly Grayscale, but it's got competitors now. So this is the coins that have been scooped up and held and locked into Grayscale and other ETFs.
So Grayscale is factored into that ETF.
Yeah.
Chart. Okay.
Yeah, that's the majority is Grayscale, but we've got two others, two major ones in Canada, 3IQ and Purpose Bitcoin ETF. So those are growing, particularly Purpose because of the lower fees. So if you look at this dotted chart here, this dotted chart represents the coins held by millions of people via either exchanges or ETFs. So that needs to be corrected for when you look at whales, because all these, obviously Grayscale's wallet will look like a whale and whales are like getting more and more supply. That's completely wrong because those coins are held by the masses, right? Under one custody provider. So when you
and we don't know if that 150,000 Bitcoin by Grayscale is that held in one account or is that across many accounts?
It's clustered together forensically. Whether it's in many addresses or not, it's clustered together forensically, so you can tell.
Right.
That's what you're paying for when you're paying for the Pro or the Advance. I don't know what do they call it, but it's the analyst version of Glassnode. It's $800 per month. They've been very kind to let me share a lot of this data. Everyone else sharing this tier 3 data and all the data on Glassnode are breaking terms of service. By the way,
shout out to Glassnode.
Yeah. So like now we look at that. That's the rise of coins controlled by the masses. This is the rise of the coins controlled by the small guys under 10 Bitcoins. The shrimps are here as well. Right, so those two combined are the control of coins, 13.6 and 17.3 together over 30% of the Bitcoin.
Oh, this is self-custody, right? This is self-custody.
This is self-custody, and this is custodial, right? So like those two together are 30% of the Bitcoin supply, controlled by the masses. And then I'll turn on the whales now, which is corrected for the coins that are held by these so-called whales, which are known as exchanges and ETFs, which are not whales, are held by everyone else, those coins. So what you get is a completely different picture, because what you're akin to on I'll pull it up now on addresses. Okay, what everyone you'll see on crypto Twitter, apart from people using Glassnode data at the tier 3, they're gonna show you this chart, which is the addresses. addresses with over 1,000 Bitcoins. And I'll just zoom into the current regime. And they're going to conclude a pump and dump by the whales. They bought up and they dumped hard, and that controlled the price, which is completely wrong. This negates all the ecosystem impacts of ETFs, supply shock. Obviously, coins are being scooped off exchanges at unprecedented rates. So the supply and addresses are starting to drop, reflecting exchanges. So this is it properly corrected for the ecosystem impacts, and you'll see that this is what whales do. If you're sitting on 100 million plus, as Bitcoin rallies, you start to divest out and diversify into other assets and buy your super yacht, right? And so once price starts falling, you hold. They hold. They only sell into rallies. Whales sell into strength. So that's what we're seeing now, right? Whales are selling into strength as Bitcoin goes up. The moment whales stop selling, that's a bearish sign, not a bullish sign in the macro landscape, not in the next few weeks ahead. So it's completely different from the view of the conspiracist theorists of whales controlling the market. They don't control the market, and they actually time the market very badly. And then you've got these middle guys, right? I'll turn off. So you got the whales on one hand selling down. Oh, by the way, let's have a look at the humpbacks. Humpback whales, more than 5,000. This is more than 10,000. Okay, I can turn these guys off to make it clear. The 10,000 Bitcoins or more, adjusting for the ETFs and exchanges, now those guys are on extreme extinction, right? And so the mega wealthy are disappearing from the Bitcoin blockchain. This is like a story of immense distribution of coins to even distribution, which is exactly what you want in a monetary network. So the guys in the middle are still in the middle, but there's a general divestment since 2017 downwards, which is very healthy. The little guys are coming up. The only difference that we've got right now is the rise of the dolphin sharks, over 100 Bitcoins. And this is the rise of high net worth family offices and hedge funds. So, and I would say hedge funds, right? The majority of those are held by many investors. So that's the outlier for this 2021 cycle, is that we've got a lot of high net worth entities buying the dip, and they're reflecting in the dolphin numbers. So, but overall, we're getting a very clear picture that the Gini coefficient, the spread of wealth within this network is moving incredibly well towards an even distribution and a very decentralized ownership, which is the only game in town, really. If this becomes centralized, Bitcoin it fails. The technology is highly decentralized, and particularly with the miners moving out, and now the hardware base is decentralized. So the main thing is for the holdings to be decentralized, and that is happening, folks. And I'll just remind people that the gold standard of money failed because of centralized holdings by central banks. Once they lost their gold, they decoupled, and we have fiat. So if Bitcoin is to succeed as a monetary standard, this distribution needs to continue to spread out evenly. Okay. Humpback whales exiting over time is not a good sign. It is, hell yes, a good sign. Look, these big guys do not time the market well. I showed that in the prior chart. So buy, sell, they're not doing the trading game well. You want them to distribute for the sake of decentralization. When you look at up, down, and locally, you may look at whales buying or selling. But if you're interested in Bitcoin going from 763 micro pennies to $42,000 over 12 years. You're interested in whales reducing their holdings and the masses holding it. I mean, don't get locked into the short-term game. Look into the big picture of are your Bitcoins going to be worth 500,000, a million, $10 million in the next 10 years? That's the game that you should be looking at, not is price going up next week or down next week, which is effectively what whales buying and selling may impact. Tone, wake up. Where are you?
No, I'm here. I'm letting you talk. No, I don't have any more questions on this. This is great. What was the next chart you were going to show? Otherwise, we were going to go through your Twitter, the chart you tweeted out 2 hours ago on Twitter.
Yeah, okay, we can I'll just, let's see. This is like forecast last time. Let's see what we get. Squeezy time forecasted. Yeah, so we're in a, this is the net user growth. Coins, new people joining the network versus people leaving by emptying their wallets. And we've been always in this sort of logarithmic growth. But what's interesting right now is we're in an exponential growth, curving upwards, parabolic growth. And so, like these two track each other, and that's foretelling the times ahead. There's an immense number of people coming.
Yeah, that's a great chart. Like it's so diverging from all other events that happen.
It's another divergence happening bullish. It's divergence for user growth. Oh yeah, this was the thing that played out from the last forecast. We're divergent, and that meant that the most probable outcome was price would then fall in line and squeeze upwards, which is already in play now. And so I think there's no new. Oh yeah, we were okay. There was a timing signature that was coming up, but that's past. We know that. So yeah, okay, that's all I've got. We can go to the Twitter chat, which I can.
Well, you just covered it. That was like those were the main ones from before.
Okay. Okay, good. I think we're that's a relatively compact analysis. I'll hand it over to questions. Otherwise, I'll just hand it back to you, Tone.
Yeah, how do you see like the Bitcoin congestion, right? So the mempool's been very, very empty. There's not much user activity. How do you see the Lightning Network play out? The amount of Bitcoin being locked up in the Lightning Network is slowly starting to rise. And once on-chain transaction fees go up, that's going to rise significantly. How does your analysis adjust when there is 10, 20, 30,000 Bitcoin locked up in the Lightning Network?
It's not the sheer amount of Bitcoins locked up. It's really where the Lightning Network becomes a custodial dominant network or a non-custodial. Because currently the main growth is, as far as I can tell, is from custodial wallets like Blue Wallet, because it's a beautiful user experience, and they solve a lot of the issues of your Lightning node intermittently going down where you can't, receive money, right, during those times. So if we go to a sovereign sort of non-custodial Lightning Network future, then there'll be an immense amount of traffic on the Bitcoin network, because each user adopting Lightning Network will require a multi-sig transaction to open the channel. And I worked out a while back that to adopt the entire planet of 8 billion people, the Bitcoin's network is barely sufficient to hold together that adoption level if we were to go in that direction. So Lightning Network will generate a decent amount of traffic for the on-chain data, like on-chain transaction space, because most of a lot of the transaction now, transaction volume, smaller stuff happens on exchanges and on layer 2 of, databases switching their balances, less so on chain. And Lightning's very similar, except they do need a opening channel, which will provide a lot of traffic to the network. So, and we're in a funny lull right now, I think, is there's a combination of the mempool being cleared out, completely cleared out. It's cleared out because we're going to try and get the...
Oh, blockchain.info finally adopted SegWit, and Bitmax might have as well. I know they were going in that direction.
Yeah, finally. Yeah. So where's the mempool? Do I have a mempool? Do I have a mempool chart here?
Yeah, that was a good. I think there's a data error in that chart. Something's off there.
There's no data error there. I think I fixed it. Network throughput. Oh, this will be good enough. The mempool has emptied. Like we had this ridiculous amount of congestion as the block time slowed down, as the hash rate fell off the network. So that congestion got processed after the difficulty adjusted and block times were back to normal. We got through all of that. There is the mempool, isn't it? Mempool transactions. Let's turn off some traces so you can see it. So mempool completely dropped down as the difficulty adjusted. So we got back to 10-minute block times, which is confirm time. We came back down. It's actually moving faster than normal because as the hash rate is rising now, it's ahead of the difficulty. So we're processing blocks faster. It's 7 minutes between blocks rather than the normal 10. And previously we were up above around 16. So that's resulting in the mempool being very much processed. The transactions mempool very much processed very quickly, and we've emptied it in amongst a very long band of sideways consolidation. So when there's very low volatility in these consolidation bands, there is very little movement in coins because a lot of the coins move when there's high volatility, and it instigates a lot of buying, selling between speculators. So those two combined have emptied the mempool. So it's completely empty right now because of those two factors. It's not really a bullish or bearish, like mempool is not empty mempool is not a bearish sign. Empty mempool is a bullish sign. Empty mempool means that a next break is going to happen. I see if I can
Look on SegWit adoption chart. That one is awesome.
We have to do Taproot adoption next. Wow, it's gone off. I didn't even notice. Is that the Bitcoin info you were saying?
That's blockchain.info, yeah.
76% adoption. Wow, finally, just on the eve of Taproot, we've got 76%. Yeah. That's like 75% majority shareholder voting right there. That's huge. Yeah. Okay, that's going to help also on clearing the mempool out. So wait, no, that's not. It's that's going to help in reducing the congestion. What that means is the 1 megabyte ceiling on the block size gets to be much higher. Like right. The higher, if SegWit goes to 100%, it means the max blocks size is 3.7 meg. Yeah. So if it is 0, then the maximum blocks is 1 megabyte. So the higher this goes, the higher ceiling of transactions we can squeeze inside a block. Okay. Have a look at the.
Well, we're coming up on an hour. We can wrap it up. I know it's late where you are, but we are gonna get you out of here with this past few days ago. I made a bet with a friend who wins all the bets. The same guy with whom I took the bearish bet last year that we're gonna stay under 10,000 for the majority of the year. I barely lost that bet. I now have a very bullish bet that Bitcoin will be above 100,000 by end of this year. Willie, are you expecting the same? Bitcoin over 100K by end of year? Because I am.
I think there's a fair chance. Yeah, these things are really timing dependent. It's very, like you can kind of like go, yeah, maybe, but you can like you barely missing out on the bear and COVID crash or that. It's very much, like, for example, the prices were grinding down. You're playing chicken with a freight train. When does the chicken lose, right? And I think it's the same with this. Is like price is now moving up. You're betting on this zone here over 100,000. Totally can do that. Like it could go way earlier, or it might consolidate longer, and then you might miss it. So that's kind of like hard to tell. I know I've got a lot of call options loaded up for December, and but I've scattered them. I go from 64,000 call, which means that I'll be in profit anything above 64,000 really, all the way up to $140,000 call options. So like I'm just going to splatter it because it's one of those things. The future for price targets is very unreliable. I have you note that the majority of trolls will say, you see price will do this and it did the other. Actually, it's like price you cannot predict very accurately. You can predict directionality pretty easily. Well, not easily, but more reliably. You can talk about the fundamentals of why that is the case, but you're throwing darts with a half blind. When you're talking about price, because it's ridiculously hard to pin down, and any kind of random market event can happen, like Elon Musk tweeting, which you cannot predict. So that's the same with this. What we have here is the upper and lower bounds under specific models. Currently it's 162,000, it's moving upwards. Upper bound might look like 200,000 by the end of this year, but who knows, that will change according to price action. So yeah, it's within the realms of possibility to be 100,000 or more. Yeah, so totally fair chance of winning that bet. Let's see. I mean, I kind of think, well, bang, yeah, could be quite, it's a very hot spot around December, eh? I think, yeah, it's a fair bet on either side.
Right. I think it's fair to say your probability of going below 30,000 is sub 5%. Mine is somewhere around 10.
Yeah, below 30,000 is pretty low odds. You can see that on the options market. It's pretty low odds.
So how long do you think this bull market will last before another 50+% pullback? Do you see it going all the way into 20?
But pullbacks are like 85% proper bear markets, eh?
Do you think another 85% pullback is coming?
No, always possible, but I'm starting to view this. I need to look at it a little bit deeper with quantitative metrics around it, but I'm a believer of the last cycle. It's a different play on Dan Howard's super cycle. He thinks we're going to skip a cycle or something.
Right,
I
so
think we're in the last cycle.
The main reason why I am confident we're not in the last cycle is because of the reemergence of stupid in the shitcoin space, which brings us back to Ethereum. And a lot of people are asking, what do you see? Because like I mentioned earlier, Ethereum is going to go through a hard fork. They're going to eliminate their mining. What do you see as the future for Ethereum?
Oh, I think of Ethereum as I think of Ethereum. Oh, we're talking about like a further off view of it. I think of Ethereum as there's two aspects to it, right? One is it as being a monetary network, and the other aspect is it being a like a, what do you call it, a application network for DeFi and financial apps. So one side you have the underlying asset, which is ETH, whether that has value based on being the collateral for that network. And the other side of it is whether that network is adopted to run major applications for finance. And I think that as far as a monetary network, it's kind of like silver to Bitcoin's gold. It's like Litecoin. Interestingly, Ethereum's logo is correctly colored to be silver to Bitcoin's gold. And in terms of a development network for decentralized applications, I think you'll find that it'll continue to have some issues as these apps become much more legitimized and scaled. It's very difficult to build applications on Ethereum at production level at high reliability. And we'll see continual issues with security on those applications. And I think scaling is, while it'll get a breather with the new ETH2, I think it's going to be an uphill battle based on the tech that it's based on. And there's other layer one networks that are competing, which technically are superior, a lot superior. So you can look at it in many ways. People say these network effects because it's monetary, and there's DeFi interoperability and blah, 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 blah. But there's also this other aspect where we've seen that programming environments change according to the vogue and needs of the time. So I don't think Ethereum's network is completely locked in. The monetary side is more locked in than the application development layer, which you can see already. A lot of developers went to the Binance chain because it's a straight port using the same EVM model.
All right. So I don't really have many more questions for Willy.
Willy loves Solana. No, I don't. I think it's fine, but
no, people just Willy, be careful with the live chat, right? They just say that shit so you can mention their scam and you can pump their bags.
No, I do. I think I have mentioned Solana. I don't know if I have, but like, yeah, like I'm like, I like a lot of technologies that may or may not win, you know, like I like Radix. Radix is a interesting technology. It's probably more robust than
I have
Solana.
no problem with any of those technologies. My problem is the scammy token that they created in order to profit from that technology before it ever shows any merit. So
yeah, I'm not agreeing
that's
that,
the problem.
on that's the problem, right? That's the problem, right? You get paid before you're successful.
Right, like I have no problem with Mempool technology. I love it. It's great. It gives you privacy. My problem is the scammy Mempool tokens. It's the same thing across the board. You want to, and this is why I like Liquid as a side chain for your DeFi projects, because it's got the same type of technology as Cardano and Ethereum and all this other stuff without the scammy token to make one guy super rich, his friends very rich.
It's quite a different technology. You can do different things, but yeah, like it's scam-free Lightning Network, and it fundamentally decentralized in its development base, right? Was it like 3 different teams building to that the industry standard that was collectively agreed upon by all. Yeah, it's just like, it's not one team. It's an actual standard. It's like one of the first times in crypto that a standard was laid down, and then developers wrote to that standard, just like internet standards, right? So yeah, Lightning Network is very interesting. You can do some crazy shit on it, but not the same crazy shit you can do with these smart contracts, layer one networks. They're kind of different things. Yeah, anyway. You shouldn't listen to me because I'm like on this side, because like I'm not a world expert on this. It's just my view. There's plenty of people that are much more deep in the guts of that than I am on the developmental side of things.
All right, so what's next for you, Willie? Sticking around Hong Kong, how is it over there? We can probably stop screen share and wrap this up.
Oh yeah, let's stop screen share. Yeah, like not a lot of places to go to. So like,
give us a life update on what's going on the ground.
Gonna work out how to get to Dubai. Can't take the family there because there's 3-month quarantine coming back. If I go, it's 1 month because I'm vaccinated. Shock horror. How do you?
Stop screen
Can
share
you
button.
stop my screen share? Oh no, here we go. There it is.
There you go.
Yeah, so and then I'm gonna work on getting to New Zealand because that's viable. Can do that. Maybe hop between the two. And who knows? Like, when does the world open up? It's going to be a while. It's kind of the long haul now. It might take another year. Governments are very stupid. Governments are very stupid handling the COVID side of things.
I know the only country I've seen handle it the best so far in aggregate has been Mexico.
Just let it be. Well, there's two things you can do. You can do either the Mexico thing or the New Zealand thing. You go hard, eliminate it, or you go free and let it herd immunity. Like the middle of the road, which is generally what the entire world has done, is the worst. Yeah, so to this, going back to monetary impacts. Like, it does strike me that so much money has been printed, like ridiculous amounts, 30% plus more money in the system now. And inflation till recently has not gone up. They were like printing ridiculous amounts. Central banks are printing in ridiculous amounts of money, and monetary inflation through the roof and price inflation flat, right? And we're starting to see that trickle in now. The thing is, if lockdown ends, what happens is people start spending. They buy airplane tickets, they go on holiday, they start to spend again. And what that will do is hockey stick monetary velocity, and the churn of the money supply starts to move and move and move. And that will fuel price inflation. Like,
right, we already saw that in the US, right? US was one of the first to open up, basically.
Yeah, so then central banks are going to have a massive problem in their hand, which is runaway inflation. So my view is governments are not incentivized to end lockdowns. Just on sheer basis of their economies may run away into inflation or even hyperinflation. So they're in a rock and a hard place. Like, do they let this thing, outside of the containing virus, do they let this lockdown end and boost the economy, or do they let it end and let hyperinflation run its course because of the consequences of what they've done by printing money in this phase?
Yeah, so right now, what would you say is Bitcoin's fair market value?
55,000.
And at what rate do you think that's gonna be growing over the next several months?
I can only speak for what it is now based on the current metrics.
So because the question I'm leading to is, to what price would Bitcoin need to spike over the next, say, quarter in Q3 in order to be considered overvalued in need of a correction?
Well, it depends on what the fundamentals look like later in this quarter, but right now to be overvalued, it's got to be in the 70s or $80,000. We're far from that now. If we're at 55,000, we're like barely fair market. So typically in a bull market, you have so much FOMO that you're like 10, 15, 20, sometimes 30% above the fundamental fair market. Then like the later stages of the bull market, you go even 50% above that. And we've not seen any of that this year. So Bitcoin's trading quite cheap, you know, even though it looks expensive, it's trading quite cheap based on the fundamentals. Okay. No interesting questions to talk to.
Yeah.
Let's end the podcast. Yeah, I think that's
Right.
it.
So people still misunderstand the decentralization claims on projects like Ethereum, Cardano, Polkadot, I don't know, Binance. They're not decentralized. And people are continuously demonizing the liquid sidechain, saying that their validators are federated and they're not decentralized. But your project being built on top of Ethereum, Cardano, Liquid, Binance, your project is totally centralized. So why does it matter whether the underlying is centralized or not? It doesn't
So
matter.
if you have a monetary network like Bitcoin, hell yes, you need maximum decentralization for the love of God and the future of your children. But if you've got a application layer network like Ethereum and Ethereum killers, you only need good enough decentralization for that to work. And an open peer-to-peer roughly decentralized network is better than a database owned by, you know, JP Morgan, right? So there's only certain levels, and so they make the trade-off from decentralization between decentralization and scalability, because those two are opposite ends of the coin, and so that's the trade-off that they have. I just do not, for the life of me, think any of these things will ever become an important monetary standard. They may become an important application layer, and their token may rise because of that. But when you look at that, application layers, whatnot, you're really talking about a network that's powering apps like, and it's not the monetary network. And if put that in perspective, the monetary network of the global world is $100 trillion. An application layer, you could liken that to, you know, any one of the networks that we have, which are $1 or $2 trillion, you know, with Apple, Facebook, you know, these kind of networks are valued in that regime, which is like 2 orders of magnitude cheaper than the main network in which money swims.
All right. Final question. What do you think of that Bitcoin Mining Council and the whole ESG? That's the environmental, social governance cartel that are basically telling businesses and the world what to do and catering to it. What is your view on that, if you have an
I
opinion?
think the mining council is just a ninja play by Michael Saylor to push back on the propaganda from mainstream media. You
And
just get a
Elon Musk.
cartel of pseudo respectable miners to publish their data, and so it's kind of a transparency publication initiative to push back and give something that the media loves. They always need source information to publish, so it just pushes back on the bad propaganda we've had against Bitcoin. And I like that, and I don't agree with you know, the Bitcoiners saying, yeah, this is like a centralized blah blah blah. I think it's just a ninja play to push back on the news cycle. And so what was the other one? The BSG thing? I
Oh,
don't
no, that's the whole thing. That ESG. That's what. So ESG is now the popular term for the next, invisible enemy to fight. Like it's
Why?
right now it's still COVID, but eventually, once everyone is forced to vaccinate every 3 days around the world, the ESG movement is going to be the next one. Basically, ESG is what's about to add more taxes to your plane ticket in order to save the environment. And of course, this doesn't apply to the rich private jet owners, only to the middle class trying to fly. So it stands for environmental social governance, and it's a movement. They're all wearing the pin. Like when you look at Bill Gates, when you look at all of these, billionaire leaders, they're all wearing this pin with it's a circle with a bunch of different colors. That is the Global Alliance to remove carbon dioxide from the environment, which is a very necessary trace element for our survival. But so that's basically the whole movement. It's called environmental social governance.
Wow. I'm always suspicious when the whole world moves in that direction. They ignored it for so long. Remember the inconvenient truth. They move now. Suddenly, it switched the other side. So now there's money to be made with that narrative. Yeah, I know it's always follow the trail of money, and you get to the truth.
Yep. All right. You'll see it more and more now that you're familiar with what ESG stands for. You're going to see it everywhere. This is the part that's demonizing Bitcoin mining.
This is the new propaganda. Actually, if anyone was halfway smart and did their research, we should be being paid to buying Bitcoin on those on the environmental metrics. Like Bitcoin is one of the strongest forces for rollout of renewable energies that we've seen. It makes the problem with renewables is that they can only spread at a rate where the margins behind renewables can significantly beat fossil fuels. And what Bitcoin mining does is it tweaks that in the favor of renewables. Their revenue can be higher in times when they're oversupplied and cannot store it. They can dump it into the Bitcoin network as surplus energy. And so those economics push things towards renewables much faster. It makes marginal, like if you've got a heat map of the areas you can go renewables, and then you've got the heat map of where you can go if you add mining, that area of coverage becomes much larger and it accelerates renewable energy. That is a non-obvious secondary impact that like people, it's always the secondary impacts that are the ones that need to be looked at because they become more powerful, second order effects.
All right, Willie, I'm gonna let you go. I know it's late in Hong Kong where you are. Guys, later tonight, I'm gonna drop the Q&A sessions from earlier this week. Also, as mentioned earlier, don't forget, we do have the financial summit coming up in, near Dubai, and then Understanding Bitcoin coming up in Dubai as well. You can find all my stuff at tonevays.com. My calendar is right there of all the events I will be attending to this month, which is Mexico, Miami, and Austin, Texas. And Willie is staying in Hong Kong for now. And on this note, thank you all so much for watching. Don't forget to follow Willie on Twitter. Check out his website. All the links are in the video description. And of course, his newsletter.
Awesome. Thanks, Tone.
Bye, guys.